Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, June 23rd. Well, the S&P 500 and the NASDAQ Composite and the Dow opened little change today. Oil prices are up just barely. The market's been very quiet so far today. Earlier, the Dow Jones was slightly lower, weighed down by Caterpillar, but that stock rebounded, and at the moment the indexes are even to slightly higher. Now we'll look at three charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at a chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 index. We watch it because it's representative of the U.S. stock market's moves and health and mood and manner. Okay, when I captured this chart today, the SPY was trading at $243.21. It's trading just below its short-term moving average, the 20-day moving average, which is coming in just overhead. So at the moment anyway, the 20-day moving average is offering resistance to the S&P 500 SPDR, the SPY. Now this number where I captured it today, $243.21, is very close to the index itself, which would be trading at about 2,432. As you can see, the 50-day moving average is rising under price. That's a positive. The 50-day moving average right now is coming in at $240.11. This is a very important line, this 50-day moving average. As you can see, except for a couple of pivots that went through it, the 50-day moving average is pretty well drawn a trend line since November of last year for the S&P 500 SPDR. So it's good, and the reason many times that the SPY will move below it for not very long and then bounce in a bull market, when large stocks, when large growth or even value stocks move down to the 50-day moving average, at that point institutional traders can come in and buy them. Many times they will if it's a strong company, and that will make that company bounce off of the 50-day moving average. So when that happens in the aggregate, you'll see the SPY in a bull market, in a healthy market, bouncing off or close to it, the 50-day moving average. So far so good. We don't have any complaints here. The SPY is still moving in a very quiet, if positive uptrend. We'll keep an eye on it and make sure if it comes down and moves down below the 50-day moving average and stays there for more than 3 days, then we do need to pull out our risk here, our risk management. We need to anyway. We need to be careful here. If the SPY cannot move up over the resistance at about 245 or the all-time highs about there, if it can move up there and move higher, it can continue the uptrend it's in. However, if it has to take a summer rest, and many times that's exactly what happens, sometimes we move down into August, then we need to watch support to see that it's maybe taking a rest, but it's still healthy. Okay, we have more support down here at 236, 235, and down at 234. At 24, which would 240, which would be, excuse me, that's up there. Down here at about 233, which would be about 2,300 on the S&P 500 itself. So nothing much going on this week. Very quiet. We'll see if next week brings us some more excitement. Let's go on now to a daily chart of the PowerShares QQQ. As you all know, this is the exchange-traded fund that follows our NASDAQ 100 index. We watch the QQQs quite a bit in Toni's Market Club, as this too gives us an idea of the strength of the markets. Now we know that the FANG stocks, and that would be Facebook and Apple and Amazon and Netflix and Google or Alphabet, we know, and Microsoft is in that group too. We know that they have literally been leading the large indexes higher. I'm keeping an eye on 5 or 6 of those stocks now to see if they can continue their uptrend. They've had quite a move up, and you can see that pictured in the QQQ. When I captured this chart today, it was trading at $140.83. It too is just barely below its 20-day moving average. Now on June 9th, the Qs touched an all-time intraday high at $143.90. So we can say that 144 here is a resistance, price resistance point. That's if the Qs can move higher here now. Our question is, in the coming week, do they stay between the 20 and the 50-day moving average? 50-day now is coming in at $138.37. Does it maintain here? Does it trade in a wider range up to 145? Can it move higher and break higher once again? That would be a Herculean, can't say that word, feat. Or does the QQQ here have to take a rest? Do these big tech stocks have to take a summer rest and perhaps move down? I am watching the 50-day moving average very closely here. As you can see, since December of last year, the Qs have not once closed below the 50-day moving average, and that's an important indicator. So let's see if the tech stocks can keep going higher here, or if they need to take a rest and move down. And if they do move down, where are they going to stop? Again, we have support here. If I could draw a straight line at about 133, 132. This is price support here, and I would definitely keep an eye on this if the QQQ breaks lower. So keep an eye on that. And I suspect if the big tech stocks take a break here and take a breather and perhaps move down and endure some profit taking, I suspect the rest of the market will soften up a little as well. But they may not. It could run around and start higher again. Now let's go to our third chart today. This is the Power Shares Wilder Hill Clean Energy Exchange Traded Fund, symbol PBW. Now the PBW has in it stocks such as, let's see, SunPower, Plug Power, First Solar, Universal Display Corporation, Canadian Solar. Now, let's hold on a minute here and rewind quickly. Last week I recommended an exchange-traded fund, the Guggenheim Solar ETF. This has some of the same stocks in it. And if you played that ETF, the Guggenheim Solar ETF, symbol TAN, you will know that it broke out this week. Well, this is a similar ETF with slightly different components in it. As I just told you about, and it looks like it's breaking out here, trying to break out as well. Of course, this wouldn't only have solar, this would have wind power and a lot of other diverse clean energy in it. Now it is trading out, when I captured this chart, $4.34, so that's not bad. We had a low back in November at about $3.40, November last year. Ever since then, the PBW has been very, 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 very quietly, for the most part, walking up its 50-day moving average. And you'll see that it didn't actually close below that 50-day for 3 closes in a row. It didn't do that. Excuse me, unless it was back in December of 2016. So for this year anyway, there have not been 3 closes below the 50-day moving average. Now it looks like the PBW could be breaking out here. It looks like it's coming up here. If we could draw trend lines here and like this, and it looks like it's going to be breaking out here. Again, it was trading at 434. Also, please know that if oil does manage to break up here, the PBW that will actually help it. Now, it's trading just above its 50-day moving average, which is coming in at 415. Again, price is 434. What I would like, of course, in a perfect world is for PBW to pull back slightly, get a little better entry here, and then start up. But it is a low-price stock, so if it continues to be positive in the coming week and the market stays positive, I may buy a little on Monday, and then if it pulls back, as long as it stays above the 50-day moving average, I may add to the position. Now, you all know that if price moves and closes below the 50-day moving average, I am out of the trade until price heals or not. But I'm out of the trade if it closes below the 50-day moving average. However, it looks like the PBW is getting some interest here. It could move higher. This is more of a summer trade where you don't have to sit on top of it and worry about it. It's a low price stock and it's a conservative one. So that is what I'm going to do with PBW on the coming week. Again, if oil prices rise, this will help. If they don't, PBW seems to be doing pretty darn well on its own. Okay, now on to this week's coming economic reports. But first, please join us this coming Monday, June 26th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade. I'll give you a mini trading lesson. And then I'll show you stocks and ETFs with entry, protective stops, and profit targets that may be ripe for high potential trades. This is a low-priced, high-value opportunity for you to learn more about the market. You'll become a better trader, you'll learn, and you'll make more money. So please join us. If you can't attend the live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. Now, the coming week's economic reports: on Monday, we have durable orders. On Tuesday, we have consumer confidence. Wednesday, we have pending home sales and crude inventories. Thursday, we have jobless claims and natural gas inventories. And on Friday, we have PCE prices, Chicago PMI, and Michigan sentiment. Again, please join us for Toni's Market Club this coming Monday. Don't miss out on this exciting opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.